JPMorgan, the first of the big Wall Street banks to report earnings, has delivered a better than forecast revenue and earnings number. Nonetheless, the quarterly figure was 6.7% down on the previous year, as costs to cover possible bad loans to shale oil companies was up and revenue from trading and investment banking fell. Net income down to $5.5 billion in the first quarter, giving an earnings per share reading of $1.35. Wall Street had been expecting something closer to $1.26. Revenue coming in at $24 billion, better than the Reuters consensus of something short of $23.4 billion. Let's take a look in some more detail now about how to trade this. It trades all sessions on the IG platform, and Josh is with us with some more analysis on how this has been moving in the wake of these figures.
Yeah, definitely. We haven't necessarily been looking at the share in a particularly positive way for some time now. In particular, lead up to this, everyone has felt that we were going to get a particularly bad number, and therefore we're really seeing those shorts somewhat unwound. I'm going to start by looking at the weekly time frame. The important thing here to note is the fact that we're coming into, once more, this 100-week SMA. You can see previously it's provided resistance on a couple of occasions, never broken through it, well, it hasn't done so within 2016 so far. But it starts to get very interesting when you look on the daily time frame, because this is a stock that really respects the Fibonacci retracement. As you can see here, we got the pullback down to the 38.2. Then on the way back down, we came right back up to this 76.4 retracement and then sold off pretty much to the point. Now, what we can see here is more recently, every time it comes up to this 50% retracement, it sells off. And just today, we're finally seeking to break through that level. So this is going to be the real crucial level that should dictate the state of play, 60.81. Remember, we also have that 100-week SMA to look out for. That's around about 61.42 to look out for. So we're around about a big resistance area. Whether we can sustain price action above that, and especially, you know, this portrays a very good picture in comparison to what people were expecting. Whether this is going to be able to sustain price action towards the upside or not, that's going to be key. Your next major resistance points are going to be 62.74, 63.48, which you can see previous support as well. When I zoom out, you can also see it's a major resistance points at the back end of 2014. That's also going to be very key. If I just quickly look at the 1 hour time frame, you can see we are now trying to find support back on that 50 fib, where previously it was providing resistance. So I'm hoping this should be able to give us a new sort of platform and a new base to be able to push higher. Should we not manage to sustain price action above that, then that would be a little bit worrying and we could sell off back below this. But I think this 50% retracement at 60.81 is going to be absolutely crucial to today's trading.